Today we'll be looking at a 15-minute day trading strategy. Who am I? I am DP Roberts, and for years I've been testing hundreds of strategies and indicators, and I'm testing more every single day. I've compiled all that information into spreadsheets and used it to create a profitable trading strategy with a custom indicator. And we have an amazing community over on Discord where we help you become a profitable trader. If you are interested in getting access to the spreadsheets of all the indicators and strategies that we have tested, as well as a free trial to our custom indicator, you can just sign up for our Patreon down below. Alright, as I said, today we'll be looking at a 15-minute day trading strategy. Before we do though, I wanted to put the testing scoreboard up for everyone to see. So to date, we have tested a total of 189 different strategies, with 61 of them being winners. The best one so far was able to achieve an 87% win rate. That was achieved using the Academy of Forex indicator. And so far, since we've been keeping track, it has outperformed 80 of the other strategies that we have put it against. So far, every single one. We've also tested a total of 999 indicators, with 422 of them being winners. Alright, so today we're looking at a 15-minute day trading strategy. And so one of the questions that we get often is, using the Academy of Forex indicator, are there other strategies that you can implement beyond just the standard strategy that we have outlined many times before? And the answer is yes. And we're going to take a look at one of those instances today. And so this is on the Great Britain pound versus the US dollar on the 15-minute time frame. So far, the US dollar is the only specific one that I would use this strategy on. I'll see if I can't identify some other Forex pairs that this strategy might also work with. And so what we're looking for specifically is when the MR line is spiking above and below these upper and lower zones, these overbought and oversold zones. Now, of course, I have my Academy of Forex indicator kind of turned down quite a bit, some of the features turned off. And so this is something that I've went over a few times before in other videos in the setup guide, is how I turn off some of the features on my Academy of Forex indicator, and just follow those. And then I did turn off the buy signal 1 option as well. And so basically we just have the MR line. And what we're looking for again is when that MR line is spiking abnormally above these upper zones and lower zones, like way outside the overbought and oversold areas. If I scroll back a little bit here, you can see that when we get these spikes to the downside, we get this rubber band effect from price action. And it happens quite frequently, enough for us to identify and utilize a strategy kind of revolved around this kind of abnormal action from the MR line. And so what we're looking for again is that spike to the downside or the upside. And if I hover over this area, you can see, if you look at my coordinates right here, you can see that it is negative 100 and then some other numbers. And so that'll tell you that it's outside, that's beyond these zones here. If I hover over this one, it's positive. It isn't in the negative because it's to the top side, but again, it's at 106, so we're above that upper zone. And when we get that spike there, what we're going to do is we're going to identify kind of a last area or last swing. And what we're going to do is we're going to look for when that MR line crossed down below this 0 marker. Right here is the 0 line, looking for when it crossed down below. Then we're going to move up to our last swing right here. What we're going to do is we're going to take a Fibonacci retracement. We're going to draw it from that swing down to when price is now making these spikes. The spike to the downside, it would have been right here initially when we identified that. And then we're going to go ahead and kind of trail this a little bit here in just a moment. What you're going to want to do is set up your Fibonacci where it has a 0. It will have a 0.3, a 0.45, a 0.6, and a 1, like this. And then what we're going to do is we're just going to keep following price action here as it's making these new lows. And what we're specifically looking for now is when the MR line crosses up above this -6.5 line, which is where this zone right here ends. When it crosses above that -6.5, so if I hover over this, and again you look at my coordinates here, hover over this line here, it's at -5.8, which means that it's now above. And now that it's at that -5.8, that means now that it has crossed back above that -6.5. And so once we have identified when it crosses back up above that line there, we are then looking to enter into our trade. And so again, we've established our last low right here. In this case, it works out pretty well. We don't have to keep trailing it. Last low here, price comes up, and now we're looking for the entry is when price crosses this 0.3 mark, the 0.3 Fibonacci level. Once it does that, you will then enter into the trade, and once price comes up and hits the 0.45, what you're going to do is you're going to move your stop, which initially is set right below this 0 mark, right at it, just maybe a couple pips below. You're then going to, when price hits that 0.45, move your stop to break even plus 4 or 5 pips somewhere in that area. And then if price comes up and hits the 60 level, so the 0.6, then that will be your exit out of the trade, your take profit level right there. Let's go ahead and look at a short trade in this case. So again, what we're looking for, we need to identify when the MR line breaks above this upper zone. That's the first thing that you do. When it breaks up above that upper zone, you're then going to start looking for the trade to kind of form around that breakout. So what we're going to do is once we get the breakout right here, we're then going to identify where we're going to start drawing our Fibonacci. So it's going to start right here because again, this is where the MR line broke above this center line, the 0 line here. Then you're going to start drawing our Fibonacci. So in this case, we are right here is our high as the MR line has broke above this. And then we're just following along as the price action keeps making new highs and the MR line is still above the kind of upper zone here. And so we just keep following this along. And what we're looking for again is when we get the break back down below, this case is going to be the positive or just the 6.5 area. And we get that break right here. Let me zoom into this a little bit tighter so that way you can see. So we get that break right here on this candle. But price action doesn't come down and trigger into that 0.3 zone yet. And so what we're going to do is we're just going to keep following as long as price action is making these new highs, following along, waiting for it to come down and trigger into our trade here at this 0.3 marker. And we make this final high right here, establishing that as the high, and we then have price action that comes down and breaks below that 0.3 area, and you can see that we get a little bit of a pullback, and then from there we make a drop almost straight down, getting us to that take profit rather nicely there. Now let's go ahead and take a look at an instance where we get an invalidation of the trade. And so here we get the spike to the downside that we're looking for. We have the cross right here of the 0 line. That's going to establish where we start drawing our Fibonacci retracement from here. And currently we would be right here. And then we're looking for the cross of the MR line back up above that -65. And so we're not doing anything yet. We're just following price action as it's making these new lows here, and the MR line is well below that 65 marker, that -65, and we just keep trailing price down as it's making these new lows down here. And then what we are looking for again is when we get that cross above that -60 or that -65 marker. But in this case, when we get that cross, you can see that price action is well above the 0.3 area where we would have entered into the trade, and that's going to invalidate this trade. Price action needs to be below the 0.3 when it crosses above this line or crosses down below this line to the upside here. And so if it's above the 3, the 0.3 then invalidates that trade. And so I have another little tip that I'll give to our patrons, which does help to maximize and get even better results. Go ahead and go over the numbers on this one before we end the video. We did the 50 trade test. Out of those 50 trades, we got 21 winning trades, 14 break-even trades, and 15 losing trades. I say it's break-even, but again, we do gain a little bit from each one of those break-even trades because we're moving it not just break-even, but into the positive a little bit. And of course, your spreads cover the commission. So in this case, it is an actual profit, not eaten up by that commission. And so we had the 15 losing trades in this case. And so we're around a 70% win rate. And so if we were looking to gain $600 per winning trade, our total gain would have been $12,600 on the break-even trades. A little bit harder to judge on this, but we added about 1,400 was about the average when looking at them. About 1,400 added to the total gains there with the break-evens. But on the losing side, we would have been risking $600 per trade. It's almost a 1-to-1 when you look at the wins versus the losing trades. It is a 1-to-1. And so on the losing side, we'd have lost $9,000, but had a total gain altogether of $5,000 on this strategy. So definitely a profitable strategy. And of course, the Academy of Forex Indicator is extremely versatile and has lots of potentials for different strategies and different trading uses. If you're interested in the Academy of Forex Indicator and you don't have access to it yet, you can get a free trial when you sign up for our Patreon down below. Once the free trial is over, it's only $15 a month to maintain access to the indicator, and you do have to maintain your Patreon status as well, but it's still super cheap for a very profitable, efficient trading strategy. And so that's it for the strategy here. I hope this adds another tool in your toolbox of trading, and we'll move on to the next video from here.